Before you watch this video, here's a question for you. What is the opposite of diversification? Good morning, good afternoon, and good evening. My name is Dave Grant. I'm the founder of Retirement Matters. This is the 5-Minute Retirement Plan podcast, and today we're talking about the importance of diversification in your portfolio. Now, diversification is a funny topic because I get to see a lot of people's ideas of what they think diversification is. For some people, it's having every account they can under the sun, but the investment in the accounts is all the same. For other people, it's having one account and having every single investment they can think of and find in that account, regardless if it's thousands or hundreds of dollars. And for other people, it is a very simple view of things. It's going to be 4 different funds. It's going to be diversified across the world. And that's their approach. Now, the reason I bring up these different designs is it is important to get this right because you want to make sure that you are getting the best returns out of a portfolio that's taking an appropriate amount of a risk so that you can get to the best place that you can be with your portfolio. So just by the definition, what is diversification? So it's essentially not putting all your eggs in one basket. So you're not putting all of your portfolio in Apple stock, for example, or Nvidia stock. You are spreading it across various different investments, whether it's large companies in the US, small companies in the other parts of the world, bonds, international bonds. You're spreading your money out. That doesn't mean that you're having to go pick various different countries and various different companies in different countries and do research on all of them. You're going to be able to do this in an easy way that I'll go into. So the easy way to get diversified is to buy a diversified mutual fund or an ETF. So that's going to be a mutual fund which builds all these companies together in one place, and you can just purchase one fund or one ETF and it buys all of them for you. So the most common example is going to be the S&P 500. So it's the 500 largest companies in the US, and then you just buy it one time and you can trade it one time instead of having to go buy those companies all by yourself. So why is that important? Well, you are trying to get away from the risk of losing more money than you should. And the way you do that is not being diversified. So if you were to say, let me pick 5 stocks in my portfolio, if one of those is a big loser and you lose all your money, you've just lost 20% of your portfolio. If you pick 500 stocks and one of those loses all of its money, you got 499 just to do their regular job, and you may not feel the impact of that company going under. So it's protecting you from the losers. So with diversification, you are not shooting for the moon. You're not going to get there. You're also protect yourself from really driving your portfolio into the ground. You're essentially riding the middle the whole way every year. You're not going to get the huge returns. You're not going to get the huge negative returns. You're just going to get that steady return again and again and again. It may be negative. It may be positive, but you're not on the high or low end of the spectrum. So if you are looking to do this yourself, the easy way to do it, if you Google Vanguard 3-fund portfolio, that's going to enable you to buy a 3-fund portfolio, which is diversified across the world. Sometimes it's spread into 4 funds, just to add a little bit more diversification. But once you get to those 4 funds, you've pretty much covered the whole gamut of things. If you are not sure about that, or you've got a number of different accounts and some are at work and some are not, this is where financial planners like myself come in and we build a portfolio for you. So if that's something you're interested in, you can find me at Retirement Matters. That's something we can talk about. So your takeaway from today, diversification can be done the wrong way. It also can be done very easily the right way. So take a look at your portfolio, Google some things we talked about here, and make sure that you are on the right track. If you're not sure, ask. And until the next time, bye.
Dave Grant is the founder of Retirement Matters, a wealth management firm in Barrington, Illinois. Dave specializes in helping people transition into retirement, specifically executives at AbbVie and Illinois teachers in the TRS pension system. If you have concerns about your retirement transition and want help from a fee-only advisor with decades of experience helping people like you can learn more at www.retirementmatters.co.